The financial health of banks and governments is linked. That's because banks are key investors in the debt issued by governments, and governments are often backstop the financial system in times of trouble. This so-called bank-sovereign nexus means that risk can spill over from one to the other. Two developments during the COVID-19 pandemic impacted the bank-sovereign nexus. First, governments in both advanced and emerging economies issued a large amount of new debt to fund their support packages. In emerging markets, banks increased their holdings of sovereign debt through mid-2022. By contrast, banks in advanced economies initially bought more sovereign debt but later reduced these holdings.
The difference between advanced and emerging economies is due to the second development, which is that central banks in advanced economies significantly expanded their balance sheets due to policies like asset purchase programs. This shifted banks away from holding sovereign debt and towards holding reserves as central banks. These changes in the bank sovereign nexus matter for the transmission of credit risk. Credit spreads of banks and sovereigns are more closely linked when banks hold either more sovereign debt or, all else the same, fewer reserves. After the pandemic's outbreak, these spreads move together more closely in emerging markets, but less so in advanced economies.